Hey guys, welcome back. In today's video, we are talking about how AMC is a huge risk to hedge funds, buying AMC, the SEC mistakes, and many more in this video. First, we take a look at this. How did AMC become a bigger risk to hedge funds than GameStop? And why can't you buy AMC in overnight trading on certain brokerages like Robinhood? So this is a post by Boss Blunt, and I recommend anyone who's watching this to obviously go take a look. And so I wanted to pick out some points where I think is very important, where I know people will understand as well, and we can go off from there. Firstly is understanding the share availability. So with AMC, we know that a significant portion of shares being held by retail investors, often referred to as holding the float. It means that fewer shares are available for trading. 90% of the AMC float is owned by retail investors, according to the company's most recent shareholder announcement in 2024. So whilst you see it all around the internet, there's never been a pinpoint, accurate where everyone's come to one decision in terms of how many shares are held by retail, how many shares are held by institutions. We've always known that the retail holds the majority. And what we can also understand is that shorts have been wanting our shares for the longest time possible. And you understand that because you see all of the tactics they've done, all the way from manipulating and suppressing price with different tactics, up until, of course, the FUD as well, where we've seen the news articles telling you to sell your AMC shares. And again, that's of course with the sake of trying to get your AMC shares off you. And so a big reason for this is that the scarcity can lead to price squeezes. With limited shares available, any increase in buying pressure can lead to rapid price increases, especially in a scenario where market makers or short sellers must cover positions. And so we can understand this as well. Firstly, we know that the limited shares here are obviously referring to the real shares. So there are limited real shares available, and those are very important shares. It isn't to say that synthetics aren't important. When the squeeze happens, they will also have to buy back the synthetics. But with real shares, we've covered it in the past, you can use it multiple times over. And so any increase in buying pressure can lead to rapid price increases. And so when you see all of these dark pool usages for AMC, when you're seeing large orders being routed through the dark pool and not having an effect, you understand that that is the reason why. And of course, the MOAS potential for AMC. Now, there are some other points to be looking at as well. Firstly, you have to see is that we have reduced institutional influence. With such a majority in retail hands, institutional investors have less sway over the stock's direction. This can make the stock less predictable from a traditional investment perspective, since retail investors often don't coordinate actions as institutions might. So this is important to understand. Now, this isn't to say that institutions don't have control over the stock, because we've known that they've been manipulating and suppressing the price of AMC. But what this is relating to is understanding when you typically see the market falling off, you'll see all these other stocks being sold off by institutions. And that's because they're trying to protect their positions. That's because they're trying to offload some losing positions. But for AMC, even if the S&P, the NASDAQ, or anything, even if they were to drop a large percentage, we will have institutions, of course, selling their positions of AMC. But what is different from other stocks that are out there is that because it's held by the majority, they don't care if the NASDAQ falling, they don't care if the S&P is falling, and so therefore they will still hold on. And so when you see if the NASDAQ were to, for example, fall over 5%, you will see stocks like Nvidia, of course, falling as well. Or when you see the S&P fall by 5%, you will see stocks fall as well. But for AMC, it isn't in a similar movement. Of course, there will still be slightly affected, but it won't be as affected as other stocks. And now, furthermore, is understanding, in terms of where AMC is at. We have to understand that collateral margin calls on AMC were higher than GME. So AMC's volatility, while AMC also saw a stock price surge due to similar retail investor interest, the margin calls and collateral requirements were reportedly higher for AMC than for GME during the period. And we can see that there was also liquidity issues. With a significant portion of AMC's flow owned by retail investors, there are fewer shares available for trading or short covering, potentially increasing the risk and faster collateral requirements. And when you saw the VAR that was for Robinhood, so the value at risk, approximately 850 million was attributed to AMC and only 250 million to GameStop. Now, I want to clarify here, this isn't a competition between which one is better. Is AMC better than GME or is GME better than AMC? Like we talked about, both short sellers are affected when the price of AMC going up or GME going up. This is to just clarify in terms of the potential there is for AMC. And this is also using data that we have seen in terms of understanding how much risk AMC was exposing to these brokers, to these short sellers. And that's a very important piece of data to obviously understand. Now, furthermore, and we talked about retail ownership, we talked about buying pressure, and you can see here. So this is from this particular user, and he's someone I've covered in the past before. And you can see his AMC position is 7,100 shares, coming in at an average cost of $4.01. So we've talked about this. There have been a different range of people. There are some people who potentially only owns 10 shares of AMC, and there are people who own thousands. And just like we've seen this user who owns over 7,000 shares. And so this is to understand in terms of just how strong the community is and why we talked about that retail does own the float, because I'm not saying that he's in the top 1%, but I've known that there are other people who also own similar amount. And again, I know that people are always DCA into AMC. And so we know that a lot of people have a lot of AMC shares. You can also see adding 1,240 AMC shares, firmly standing by my conviction, while also thinking of a bit of help in moving north can't do any harm. So this is from a particular user in Sweden. And the first user was someone from the US. So we can see just how big the community is. And it's why we talked about if we're getting people from the US buying and we're getting people, you know, in terms of outside of the US, in Europe that are buying, you can truly understand why the understanding that 90% owns AMC float, why 90% of the retail owns the AMC float is extremely likely, and why it could even be upwards of 95 or even 97%. And why when we see data showing that institutions own over 40%, it's clearly something that it does seemingly look like very unlikely. And you can also see from another user, bought this because AMC is not a $3 stock. And so I've just shown you now, I've only shown you 3 people. But what I think it means is that it reflects to what a lot of the apes in the community think and what they always do. And that's what I've said in terms of understanding just how big and strong the community is. Furthermore, so we talked about how Doge is going to be auditing the SEC. And they've made a tweet, Doge is seeking help from the public. Please DM this account with insights on finding and fixing waste, fraud, and abuse relating to the Securities and Exchange Commission. So this is obviously talking about the SEC. So I highly recommend anyone who obviously has the information to obviously message Doge SEC. But some of the things, we can already see people saying, ban payment for order flows, naked shorting, and off-exchange trades. We have perpetual FTDs. The rehypothecation of securities needs to stop. Now, again, I highly recommend people to obviously say this thing to the Doge SEC. And this is something I do think that a point needs to obviously get across, because it's very important that they need to understand that this is damaging not only the stock market, but also the retail investors. And it's causing a lot of harm to a lot of people. We can also see this. So Brad M is someone who's followed up on this particular case on the AMC wrap tokens. And you can see, so here's one of the latest response from the SEC's senior special counsel. And so despite a previous email claiming no record existed, the SEC has now confirmed that the FOIA office is still actively conducting searches and consulting with different offices to determine if any record exists. The request is still in progress. No final decision has been made. No official response denying records was ever issued. The only legitimate correspondence was an acknowledgement letter and a fee waiver / expedited processing notice. So this is where we are looking at. And like I said, we've seen how the SEC in the past before has obviously done things. And that's why we need, of course, the Doge to make these audits to understand what is going on. Like we said, we've already seen the problems. Payment for order flows, naked shorting, off-exchange, wrap tokens. And furthermore, you can see this. So SEC writes of $10 billion in fines it can't collect. Now, I think that this is a huge problem. Not only because of the fact that $10 billion in terms of gone, But it's understanding that these fines were issued in the first place to make a statement, to punish the hedge funds, to punish the institutions who have done something that shouldn't be allowed and exploited the retail investors. So the very fact that they couldn't collect these fines means that not only did these firms exploit retail investors, made money off of them, but they didn't even have to pay any money. And what makes it worse is that we've seen in the past, these fines are extremely small. We're seeing fines anywhere from $300,000 to potentially $3 million. Now, when you hear these numbers, yes, they're big. $300,000 to any normal person is a huge number. $3 million to any normal person is a huge number. But when you understand it's a $3 million fine to companies who are making tens of billions of dollars per year, and they're not even paying that, you just truly understand how bad that is, and it's why we need more action on this. You guys, thanks for watching this video. I'll catch you guys next time.